Welcome, ladies and gentlemen, to our next instalment in our bite-sized basics series. This time we are talking about decentralized finance or DeFi. My name's Matt Harry. I am one of the investment partners at Apollo Crypto here in Melbourne. We've made these slides purposefully content heavy in order that you have a reference document to go back to. Hopefully that is helpful for you, but of course, always feel free to reach out to the team here at Apollo Crypto if you'd like to know more. We will get started right now. Okay, so usual disclaimer. In terms of an overview of decentralized finance, it just refers to the fact that we can now build financial services on blockchain technology. Primarily, a lot of the building is being done on Ethereum. They operate without central financial intermediaries, such as banks or brokerages. So it's allowing individuals to transact peer-to-peer as such. So we're talking about the democratization of financial services, so small end user value and peer-to-peer transfer, value transfer, disintermediation, and all based on smart contracts, which we covered off in the Ethereum bite-sized basics presentation. So if you don't understand disintermediation and smart contracts and how they work, I would stop this video and go back and just review the Ethereum presentation. It will help you with your understanding here. So in terms of the features of DeFi, it is decentralized, so no single entity controls the system. It's governed by code and community consensus. It is permissionless. Anyone with an internet connection can use these services. So that is that democratization piece I mentioned above. We're talking about inclusive financial services that are not hamstrung by the cost of providing access to the product. There's transparency here. So all transactions are recorded on a public blockchain. And of course, interoperability. So different DeFi applications can interact with each other, thus fostering innovation. This is a piece that we'll come back to later in this presentation. So in terms of DeFi's impact or decentralized finance impact on the crypto markets, we've seen a significant increase in utility. So we've significantly expanded the utility of cryptocurrencies beyond mere speculation or payment. With the arrival of decentralized finance, we've seen the provision of additional liquidity. So DeFi platforms provide liquidity pools where users can lend, borrow, or trade assets without needing a middleman. So beyond simply bringing additional investment capital to crypto via the broadening of the offer, we also currently have more than 220 billion US dollars in the form of stable coins locked in DeFi protocols. That's TVL that you may have heard of, which is an acronym for total value locked, refers to the amount of total capital contributed to liquidity pools or locked in DeFi applications. And that is very much on the rise, rapidly on the rise. So we've seen ability to stake now. Users can stake their crypto to earn rewards, similar to earning interest in a bank. So for example, as we covered off in the Ethereum presentation, you can stake Ethereum in order to help secure the network. And in return, you will receive staking rewards or a yield, as it would be commonly referred to. So almost anything now can be tokenized on a blockchain, from real estate to art, making it much easier to trade or use as collateral. We will come back to that later in the presentation. But basically for now, that's what that is. Okay, moving on. How is DeFi challenging traditional finance, TradFi, as we refer to it? So we're seeing an improvement in accessibility. So financial services now are accessible globally, even to those without traditional bank accounts. seeing speeds. Transactions can happen transactions are happening 24/7, as opposed to the traditional financial system, which is open kind of 9:30 to 4:30, 5 days a week. We're seeing much faster settlement times compared to traditional banking with these crypto payment rails. Control is also improving. So users now have full control over their assets since they manage their own private keys. So you're reducing the risk of seizure or censorship, which we will speak about a little bit in the Bitcoin presentation. And of course, cost. Many DeFi services operate with far lower fees. Network congestion can be a factor at times, but we're seeing that addressed via a number of layer 2 solutions on the main blockchains that DeFi is being built on. So you just see there a chart on the right-hand side showing a very impressive growth in TVL locked in DeFi applications over the past couple of years. In terms of the applications themselves, some practical applications are things like lending and borrowing. So platforms like Aave or Compound that allow users to lend out their crypto or borrow against it. Decentralized exchanges have been a huge DeFi application, commonly referred to as DEXs. So things like Uniswap or SushiSwap, which enable token swaps without a central or custodial exchange. Yield farming, so users can earn returns by providing liquidity to vaults and fixed rate products. So you can do it yourself, or you can lock your tokens in what is referred to as a vault, which basically automates the process for you. It's kind of like investing in our market neutral fund, which does a lot of the yield generation strategies for you, but a vault is on chain as such, whereas our fund is not at the moment. So the vault will generate return for you and take a cut of the proceeds. Seen the arrival of stable coins, tokens like DAI that maintain a stable value, often pegged to the US dollar. Things like Tether, USDT, they're all using DeFi mechanisms. I'll give you a little bit more color on stables on the next slide, and of course, some of the other applications, insurance. So projects like Nexus Mutual, they're offering decentralized insurance where users can pool funds to protect against smart contract failures or other risks within the crypto ecosystem. So in terms of the rise of real world assets and stable coins, real world assets very much is the topic of the moment, with the BlackRock CEO Larry Fink stating recently that he felt real world assets being put on chain or tokenized was absolutely the future of finance. So we're looking at things like art, real estate, commodities, increasingly being tokenized on blockchains, which is so basically what we're talking about there is a conversion of ownership rights to tokens. So you can have fractional ownership, which can be easily and efficiently transferred and settled on chain. We're seeing increased liquidity via tokenization. So traditionally illiquid assets like property and art, we can now buy and sell in small fractions instantly, almost instantly, and 24/7 from anywhere on the planet. So a lot of functionality, a lot of efficiency there. Much broader investor access. So tokenization actually lowers the barriers to participation for smaller or retail investors. So we often refer to this as the democratization of access to investment opportunities previously reserved for the wealthy. I mentioned Larry Fink already. Apollo Crypto is tokenizing a fund that will run on the Ethereum blockchain. So keep an eye on that. Please talk to us about that. That's a very interesting and exciting development for our business. And of course, stable coins. So tokens pegged to the value of the US dollar, Aussie dollar, and other fiat currencies, as they're known. They've been hugely popular, currently a $225 billion market cap. And they've also been wildly profitable. So the Tether Corporation made a $13 billion US dollar profit last year and was the most per employee profit of any company on the planet. So wildly efficient. PayPal also released Pi USD in late 23. So being accepted and utilised at every level of the traditional financial system. The future of DeFi, we believe that DeFi has an enormous potential. We do skew the portfolio towards DeFi applications. There are also some challenges, both of which we've kind of outlined here. So in terms of regulation, regulatory oversight is likely to increase, which could have kind of unknown impacts on the development of DeFi. Right now, regulatory pressure is easing and greater clarity is developing. So that's very positive. In terms of scalability, blockchain networks need to scale to handle more transactions without compromising speed or cost. But really healthy layer 2 activity at the moment with the arrival of layer 2 solutions for things like Ethereum dramatically improving cost and speed or efficiency. Security, so with recent high-profile attacks on centralized exchanges like the Bybit hack recently, North Korea stole, I think, $1.4 billion worth of Ethereum. There comes increasing demand for decentralized applications. They are a DeFi application where security is paramount. So DeFi, a DEX is wallet to wallet. Trading of crypto tokens without the need for a centralized financial model or a centralized exchange. So there's no chance of being hacked with a custodial exchange as such. You're just exchanging your assets directly with another user. In terms of integration, we're seeing more integration between DeFi and traditional finance, so the emergence of hybrid models. Some of the examples are Coinbase and Ondo. So Coinbase is providing a gateway for traditional finance to enter DeFi. It offers a lot of crypto native functionality like access to staking, lending, yield farming. So it's kind of sitting in the middle there, simplifying the transition for non-crypto native users as they onboard into the crypto ecosystem. So they're blending traditional centralized infrastructure of a centralized exchange, the Coinbase exchange, with decentralized offerings as such. So Ondo as well tokenizes securities and treasuries and makes them accessible on-chain. Its platform, Ondo Global Markets, provides native access to traditional securities for DeFi users. So I guess the opposite way to what Coinbase is doing. So it's a great example of the integration that's happening in the industry, and we are seeing a lot of innovation. New financial products and services will emerge, potentially revolutionising how we think about money and investment. As an example, DeFi. So we're starting to see AI being integrated into DeFi to enhance decision-making and automate processes. A couple of projects like Oasis and Reflexer use on-chain machine learning to offer personalized financial strategies. So, things like optimizing yield farming or managing risk in real time. So we're starting to see these sort of innovations really pushing or changing the way financial services are delivered, certainly with major improvements. So that's it for now. We'd like to keep these nice and brief. If you're interested in getting a copy of this presentation or learning more, please reach out to myself or Henrik. Our details are right there on the screen. But for now, I will say thanks for joining us, and we hope to speak to you soon. Bye for now.